Markets are rallying across the board today. Hong Kong is leading gains with the Hang Seng up more than 1%. After 11 rate hikes by the Federal Reserve, markets had widely anticipated the decision to stay put, keeping the Fed funds rate to its highest level in more than 22 years. There was uncertainty, though, about how ambitious the FOMC might have been regarding policy easing, and that was a pretty ambitious dot plot there. 3 cuts in 2024, 4 in 2025. Following the release of the decision yesterday, the Dow Jones Industrial Average jumped more than 400 points. Let's get more on this now with Russ Mould in London. He is Investment Director at AJ Bell. Thank you very much for being with us today. Russ, the pivot, right, entirely unexpected. What's your view on what happened yesterday?
Yeah, I think the Federal Reserve had been publicly stating that it was in no hurry to cut headline borrowing costs in America because the battle against inflation had not been won. A much softer tone yesterday. Financial markets had started to move ahead of the Federal Reserve. US government borrowing costs or bond yields had already started to decline, but nevertheless, markets very pleased to hear the change in tone, as you suggested, with share prices and bond prices up strongly across the board.
Right, what's happening on the currency front? We've seen the dollar weakening. What's going to happen on the euro and British pound front? And how do you think that the ECB and the Bank of England will now adjust their own monetary policies?
I mean, again, both the ECB and the Bank of England are saying publicly, no, we're not in a hurry to do anything. Again, our battle against inflation is not won. So they're still saying, going back to the Fed's old message, but clearly the pressure will begin to mount on them to cut rates, as if they do not move, their currencies will probably rise strongly against the dollar and perhaps make things more difficult for their exports and slow their economies down. So there will be gathering pressure. And if you look at the financial markets, the Bank of England is now expected to produce its first rate cut in March, even though publicly it's saying it's no intention of doing so.
Right, as early as the first quarter. Then Russ Mould, thank you very much for sharing your views. And now let's go to other top stories from around the world. Argentina's inflation rate has topped 160% in November, higher than what analysts had expected. Consumer prices surged 12.8% compared with the previous month, marking the highest figures this year. Price increases are likely to accelerate even further in the coming months after President Javier Milei's massive currency devaluation earlier this week. The International Monetary Fund and the World Bank have approved $4.5 billion in debt forgiveness for Somalia. That's after the nation completed years of financial reforms. It's hoped the debt relief will facilitate access to additional financial resources to help strengthen Somalia's economy and reduce poverty. Somalia has been pursuing a debt relief journey through the Highly Indebted Poor Countries Initiative. And Tesla is recalling nearly all of its vehicles on US roads over a safety issue with its autopilot technology. The recall, which covers more than 2 million vehicles, comes after US safety regulators said the driver assistance system was open to foreseeable misuse. Yasmin Al-Sabawi has more from Washington, D.C.
Half of all electric cars sold in the U.S. come from Tesla. Now the company's undergoing sort of an unusual recall process. We understand that all Tesla vehicles in the U.S. have been flagged as having a, quote, partly defective autopilot system. Now, autopilot is that self-steering, self-accelerating mechanism found in Tesla vehicles. This was something initially flagged by the U.S. National Highway Traffic Safety Administration after a 2-year investigation, saying after looking at almost 1,000 Tesla crashes, they found that, quote, the prominence and scope of the feature's controls may not be sufficient to prevent driver misuse. Now, Elon Musk, Tesla's owner, of course, saying that this is something he will address, even though there was initial pushback and that Tesla wasn't owning up to this issue. Now saying that they will ensure customers can have trust in the company. This issue will be addressed quote, over the air. Basically, it's going to be a downloadable feature. No need to take that vehicle to a mechanic if you're in the U.S. or to the dealership. No word on whether this affects Teslas outside of the U.S., but certainly something now that's shaken up the company a little bit, given that they have very much banked on the autopilot as being a key, unique feature of their brand.